Hi everyone, welcome to today's episode on how to real estate. Today is going to be a little bit of a buyer beware conversation. We've recently had foreclosures start coming back on the market. Yay, I think. I don't know. It's exciting for investors, but it can be quite scary. The thing about a foreclosure is when you're getting a really great deal, there are risks involved, and it's important that you proceed with caution. And what I continue to see is that the investor is trying to save money up front, and if there's a loan involved, the lender is trying to help them save money up front, and they're skipping a few major details. And guys, it is major. So I'm going to outline just a few today. I'm going to try not to let this be a really long rant, but I do want to point out a few items that you do want to lean into and check into prior to closing, during your inspection period. I say go make the offer, and then if your offer is accepted, then you have the timeline to check into these things, okay? So the first thing is, goodness sakes, please, please, please verify all utilities. Now, this sounds like a no-brainer. There's a home sitting there. Someone has lived there before. There has to be a water line. There has to be a septic. There has to be internet. Guess what, guys? Not true. We've had some crazy situations where we had a situation where the gas line that went to the home actually crossed the property and went into the neighbor's field, where the neighbor owned a private gas well. Have you ever heard of that? Jill, have you ever heard of that? No. Isn't that cool? They had their own gas well, and they were family to the home. The property owner lost the home, and every item in the house, the furnace, the kitchen stove, the hot water heater, everything was natural gas from the well. So you think, no big deal, we'll just hook it up to the natural gas out on the road. Well, this was a rural property, and there is no natural gas. So there is no option other than switching everything to propane, which can be kind of expensive because it's a little bit of a different coupling to connect natural gas than propane, or switch it back to electric, and that can be a really big pain. So making sure that you never assume anything when it comes to utilities. The same thing goes with septic. We had a situation where everyone assumed that there was a septic. Unfortunately, fortunately, this kind of thing probably won't happen anymore. But keep in mind, if you're buying a foreclosure, it was probably grandfathered in and no one checked it. But we had a situation where a family member built 3 homes side by side, and he tied them all into one septic. Now, this was before DEQ actually checked everything. And when his daughter got a divorce, he went over and disconnected that home because she moved out and it was the ex-husband that was living there. That gentleman had some issues, ended up losing the home. The home went into foreclosure, and it was not connected to any kind of septic. And it was a very large home, and the people who purchased it to flip it, their thought process is that they would be selling it to a large family. Well, unbeknownst to them, there was no septic, and to have a septic installed, it was about $15,000, because it wasn't just the cost of the septic. There were some very, very large stones or rocks. I can't think of monoliths, I believe. You know, like when they're, Jill's like, what? These stones were so huge that it was very, very unique. Wow. But also the way the land sat, there was very limited space on where they could actually put the septic also. So do not make assumptions about any kind of utilities. You personally, as an investor, you need to call and verify these details yourself to make sure. Water meters, that's probably the most common, is you're like, well, of course they've got water. Well, here's the thing. If the previous owner did not pay their water bill, then their membership and their meter was pulled. Now, whether it's physically still on the property or not, not, that does not mean that it automatically conveys to you when it's a foreclosure. Foreclosures are a completely different monster. And what I like to tell my buyers, if you're looking at a foreclosure, take all of the information and knowledge that you've learned from previous purchases and throw it out the window, because foreclosures are completely different. The seller of a foreclosure is typically not a state-owned entity, or it's actually a bank. So either of those will have different rules that they go by as opposed to what a standard seller in Oklahoma has to do. So utilities, do not take it for granted. Do not say, well, I saw the meter, so I know that there's a water meter. That does not mean that that water meter transfers to you if the previous seller has a $1,500 back utility bill. Then you could be responsible for that bill. So make sure that you check that out. The second item that we run into that probably is the biggest is a mortgage inspection report or a survey. Again, a lot of the same situations that we've talked about, how a family member was involved, is how we end up with these weird layouts of property or issues with property. We had a situation several years ago where a really cute home came up for foreclosure, and there was a gentleman still living in the home, and I want to say there were probably 12 to 15 offers that came in on that, and you couldn't go in the home. It was sight unseen, but it was so cute and tidy and neat from the exterior. Everybody wanted it. Well, the investor who ended up purchasing it after closing, went to the home to evict the occupant, and the occupant met him at the door with just the biggest smile and biggest grin and a document showing him that the bank had foreclosed only on the back porch and the back half of the yard. So yeah, Jill's like, how would that happen? It was an incorrect legal when the mortgage was done. And when the mortgage company, when the gentleman quit making payments and foreclosed, it was only the legal description of his back, the back part of his lot and his back porch. So these things can be quite timely, quite consuming as far as money, and quite expensive. So if you think that you're saving money by not doing inspections, by not calling the utility companies, by not paying for a mortgage inspection report or a survey, please be aware that that is not true. It could actually end up costing you significant amount of money later on. So go ahead and sit down, have a conversation with your lender, with your realtor, and with the title company prior to closing or prior to determining what you're going to do and what you're going to save money on. Because I'm not kidding you, if you buy a $100,000 foreclosure and think, okay, by the time I get through putting $50,000 in it, it's worth $250,000, that sounds amazing and great. But keep in mind, when you purchase title insurance, the title insurance only covers the first $100,000 because that's the amount that you paid when you bought it. Title insurance is different than homeowners insurance, but the title insurance will only cover up to $100,000. So if you buy the property and then find out that only half of the home is on your lot, then you're in a pickle, and now you've flipped the home as far as putting all of the money, the time, and the energy into it, but you may not have title insurance to get that cleared up and taken care of. Now, again, this is not something I can totally and thoroughly explain in a 10 to 15 minute podcast, but what I do want to do is I want to put a little bit of concern, and dare I say fear. Yeah, Jill's like, yeah, let's make you be a little bit apprehensive, because at the end of the day, I and the sales team, we want you to be successful in your purchase and in your flip, or even if you're just buying it for yourself, because at some point, eventually, you or someone in your family is going to call and say, we're ready to sell, and we want you to be able to resell that and not lose money on it, and be able to make the kind of money that you were hoping to make. Now, a mortgage inspection report that is very similar to a survey. And I'm going to hold one up. I don't know that this is going to convey. Jill, what do you think? Will they be able to see that? So basically, when you are purchasing, you want to see a mortgage inspection report or a survey, or you want to think about having this completed as part of your purchase so that you know what you're getting into. If those come back and there is a problem where the building is over a section line, over a property line, there's an encroachment from the neighbor, that kind of situation, prior to closing, there's typically a loophole that we can get you out of it and get your earnest money back. After closing, there's no loopholes. And what we hear all the time is people tell us, no, it's okay. I grew up in this area. I know that that barn has been there for 40 years, so it has to be with this house. We just had a situation out at the lake. Jill's like, I remember hearing all about this, where a one-car garage did not belong to the owner of the land who had been using it. The back neighbor actually owned the land that the one-car garage was built on. So that was a very interesting situation. So again, I want everyone to have a successful purchase and a successful closing, and then when they go to resell, awesome. But at the end of the day, I don't think any of the things that we've talked about here typically average more than $1,200. So if you're trying to save $1,200 when you're purchasing a foreclosure, just keep in mind that that could literally cost you hundreds of thousands of dollars later if you find out that you only purchased the back porch and the back lot. So buyer beware. I absolutely love foreclosures. I've purchased foreclosures myself personally, and I've helped hundreds, literally hundreds of people purchase them. But you have to do it with caution. You have to be aware of the risk. And there's some real simple steps that you can do rather than just running in and buying it and then finding out that you've got a problem. So reach out to your trusted advisor. Ask if they've purchased foreclosures, ask how familiar they are with foreclosures, and then proceed with caution. But at the end of the day, I would still buy a foreclosure in a heartbeat. Jill, what about you?
Potentially.
She's potentially. She ain't scared. She would proceed with caution. So, okay, with that note, oh, good. I didn't even pay her to say that. That's so good. Yes, again, I think it's very important to work with someone who is familiar with foreclosures and to know that there are absolutely no guarantees and that you just need to proceed with caution. So again, guys, thank you for watching today's episode. I hope it didn't come across as a rant because it's really not. As well as most realtors, want you to be successful so that you will continue to purchase and purchase many as years come, but you do have to use some common sense there. So again, thank you for watching. Please like, follow, and share. And if there's a topic that you would like for us to discuss or you would be curious about, or if there is someone you would like to see on the next podcast, reach out. We'd be happy to check it out. Thanks for watching.